Welcome to Bears in Exile. Today is Thursday, February the 21st, and this is a quick hit on the indexes. Starting off with the Dow. We had fantastic development on the indexes today. The Dow down almost 47 points. It would have been great if it had been at its lows, but it wasn't. The lower Bollinger Band putting a stop to it, closing right at it, and not quite making the long-term moving average bar. Beyond that, what do we have? Well, we have great confluence still, just like last night, with further down movement in the indicators. Everything is pointing down, with the exception of the RSI going sideways. The only thing I really don't care for at this moment is the CCI diving so far, so fast. When it does this, we normally get a bounce back. You can see here, very steep decline, bounces back. You can see over here, steep decline, bounces back. You can see right here, steep decline, and yeah, this one actually didn't work out the same way as the others, but very steep decline and eventually bounces back. I really wouldn't be overly surprised to see this attempt a bounce back. The bulls have not done their counterstroke, and it isn't until the end of their counterstroke and how successful they were that we'll be able to see if if this is going to be a permanent change of trend, which I don't really think that it's going to be, but I would like to see their counterpunch, have it crap out relatively fast, and then we can finish off the move to the downside for however far this is going to be. But anyways, that's my thoughts on the Dow. Going on to SPX. This one is more interesting. It's, of course, similar to the Dow, but we did get to the long-term moving average bar, and that's exactly where it bounced today. And yeah, it still looks bearish in the daily. Absolutely nice confluence. I do want to see a counterpunch, but I guess we'll see if we get one at all. But at this point, if we're going to have a deep penetration into the long-term moving average bar, that would be the second to the last moving average right here, which would be about 1480 is what I would be looking for. And if this is just going to go straight in, it should achieve that point. Moving on to the VIX. VIX, very nice. It lost some of its oomph by the end of the day, but that's okay because it would have been way outside of the upper Bollinger Band and probably a bad sign. Instead, we closed just barely above it. We still have good confluence, but this one has the 14-day RSI moving average going up already much farther than the Dow, much farther than SPX. It doesn't have as much room to move before it is out of room. So that is a little bit concerning to me. It has gone massively far. I think this was some kind of a record today on how far it's moved in so short of a time. But right here, the major price consensus level from January to me would be important, but we'll see how far it goes. And actually, I should look at some volume, shouldn't I? I'll do that last. And going on to TNA. Just like SPX, getting to the long-term moving average bar, and that's where it retreated from. Plenty of room to move to the downside still, bearish in the daily, but I do not count out a counter punch. So really want to see that, really want to see it fail, and then we can finish out the move. And that's what I'm hoping for, looking for. And on this one, we'll be looking at about 72, I think it is. Oh, just above 72. For a deep penetration on the bar. Looking at the internal structure of volume on this sucker, because we know that we don't have the complete crossover yet. Where is it today? Well, we're still positive on the accumulation distribution. We're still positive on the on-balance volume. We do not have reds on either of those two. We have two reds, in danger of a third, and I would like to see that counterpunch before we have a cross on the on-balance volume accumulation distribution, and then go on to finish out getting all 5 reds. That's what I would really like to see, but maybe I won't see what I want to see. I was a day off with silver. And SPY, any difference? Let's see, SPY for the S&P 500. So close to a cross on unbalanced volume. They really need to do their counterpunch like tomorrow if it's going to pan out the way that I'm hoping that it will. But who knows, maybe we'll get that cross tomorrow and it's all just going to fall apart. That does make it a little more time intensive, I suppose you could say. And looking at the VIX for, even though this isn't quite the same as the VIX, close enough. Unbalanced volume, not yet. Accumulation distribution, not yet, not even pointing in the right direction. Tomorrow is going to be so darn critical. So, if we get a bounce up tomorrow, I'm not really concerned about it, only if it were to take out the current high, and I don't think that it'll do that all in one shot. Hopefully I'm not wrong about that. And there it is. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.